With us as we're all trying to figure out what this means business to business, industry to industry. It seems that right now, home builders and housing, as we saw in this morning's data, are going to continue to suffer. What does that mean for your business?
Thanks, Oliver, for having me on this afternoon. In terms of the housing market softening, there's some headwinds that creates for our business, and there's actually some tailwinds. A housing market softening threatens pro-install product systems and sales installation. It's triggered by fewer home builds and fewer relocations. But the business tends to perform historically well in recession. The need for our DIY products increases. And not unimportantly, our attrition is pretty significantly impacted by relocation. So about 30% of our attrition is impacted by relocation. And although we face some headwinds from a housing market softening perspective, we pick up some tailwinds because customers are relocating less frequently, and that leads to higher customer retention.
So does that mean then that if customers are staying in their homes, they want to upgrade or they want to renew the relationship that they already have? Is that basically what you're saying here? Just look, if they're not moving and they're stuck where they are, then fine, they're going to want better stuff for their home?
Yeah, that's right, Oliver. And they also, the customers, when they relocate, if a customer is moving overseas or downsizing or moving into a rental unit, that customer will sometimes disconnect. And because relocations in this environment are much lower, the frequency with which they attrit is lower. And then to your point more directly, we have customers who are spending more time at home. That enables more home improvement projects. There's an increased concern in this environment for the care of loved ones who may be living alone. And so there's demand tailwinds on that front as well.
I see. Now, still from the numbers I see in your latest report, I mean, the residential part of this market is easily the biggest one for you in terms of the current market profile of where your products are. What does that mean in terms of how you're going to be using resources during this period, though? Are you reining in expenses? Are you actually going to have individuals out there selling or making calls? What is your approach in terms of what you want to spend during this period?
Yeah, it's a bit of a balancing act, managing and balancing our offensive game plan and our defensive game plan. We're fortunate in that we have a highly variable cost model, and where we have demand that has softened, whether it's installation or service calls, we have a program in place for our employees that offers voluntary furlough. And so we have decent equilibrium between supply and demand at the moment. The business, though, tends to, it's not recession-proof, but it tends to be a business that's recession-resistant. And our services are considered critical by our customers, whether it's life safety, smoke alarms, carbon detection, or whether it's the peace of mind that's brought from a security system. It tends to be viewed as essential by our customers. And so we continue to sell systems, we continue to install, and the service volume, generally speaking, has a pretty steady demand as well.
Jim, have you decided, or will you know if you need help from the government at all? Or is ADT going to be involved in any of the payroll protection plans or any of the assistance that's available?
Not at all, Oliver. We, as I mentioned earlier, we have the good fortune of having a revenue recurring model. About 80% or so of our revenue is recurring, much of it under contract. And we've done and continue to do stress testing from a liquidity perspective. The business is healthy and performing well, and we won't be asking for or needing government assistance.
Jim, I know that part of the challenge in the industry over the last few years has been keeping technology looking forward. I know that there's ADT mobile apps. I know that, as you mentioned, the business itself is already kind of a sticky, recurring cash flow type of business. But if there are peers or competitors in your market that are smaller and start to struggle as a result, do you have interest in deploying any of that cash to bring on smaller businesses? I know there's been some M&A in the recent past, but is there other opportunity out there that could come to a cheaper price if markets continue to remain like this?
Yeah, potentially. Absolutely. We are, our North Star is capital efficient growth. And we're looking at all kinds of alternatives that are a best use of our cash. And one of the opportunities that's more available to us in this marketplace is via consolidation. You have to go back all the way to 2008, 2009, maybe 2010 to see the impact of recession on the marketplace. But at that time, there was pretty significant consolidation. And as some of our smaller competitors struggle, both in the commercial space and in the residential space, it will be one of a suite of alternatives that we look at to deploy our capital.
I know the last earnings was a little bit over a month ago, March 5th. The revenue that you gave in terms of the 2020 outlook, $5 billion to $5.3 billion. Jim, is there? Do you expect to have any update for that, given that how much has happened since then? Is the company still confident in that guidance?
We're not giving any guidance at this stage, Oliver. We're holding off to our first quarter earnings and our first quarter earnings release and the updated guidance that we give at that time.